there was a study done not long ago that I read, and I think it was Gallup who did it. In America, 74% of the people who took the poll hate their job. So if you start with that, so this concept of buying a job, well, when I say buying a job and acquiring a business, you acquire a business that's going to generate some joy in your life. You're going to enjoy going to work every day. You're going to be able to improve the lives of others. You're going to be challenged and have the opportunity to grow. You're going to be able to build value over time, improve your own lifestyle, the lifestyle of your family. And if you grow it well or reasonably well, you're going to sell it in the future for more than you paid for it. So what the hell's wrong with that? If that's considered buying a job, I think it's fantastic.
Welcome to 7 to 8, our special series on 7 to 8 figure entrepreneurs. In this special series, I interview $1 million, some $10 million, and even some $1 million business owners who uncovered their twists and turns in their entrepreneurial adventure in order to help you to avoid the potholes and stick to the fast track. Welcome now to Center Stage, our next special guest. Hey there, peeps. This is Michelle Nedelec, and I'm super glad that you're here with us today because I'm here with my most amazing guest, Richard. Richard, thank you so much for being here with us today.
Thank you. I appreciate being here.
Excellent. So give everybody the highlight of who you are and what you do for business.
Okay, I'm in the world of mergers and acquisition and have been for 3 decades. And a significant part of my business is focused on the buy side, providing resources and materials and advisory support for individuals looking to acquire businesses.
Very cool. How did you get into mergers and acquisitions, do you think?
Well, quite by accident. I grew up in Canada, like you, was based in Canada, and then got myself into a horrible financial mess with some really brilliant stock market picks and found myself in debt up to my eyeballs. And I was working for a company doing very well, but realized the only way that I was going to get out of this mess was either win the lotto or go to Las Vegas. And I don't buy lotto tickets or gamble. So I realized the only way I'm going to dig myself out of this hole is potentially by acquire business or go into business on my own, where I wouldn't have a ceiling on my earnings.
Okay, this is a cool decision, pivotal point. I want to talk about this pivotal point because I know that there are a lot of people that get themselves into positions, whatever, or the government gets them in the position, or, the industry changes and things happen. But in that moment when you're going, okay, how am I going to get out of this? How did you decide that buying a business was going to be the way? So you're working at a job, the investment side of things hasn't worked out so well. Hey, there's this whole thing of going to business. It terrifies most people. I think I'll do that terrifying thing. That sounds awesome.
Well,
what was going on in your head?
I think that saying the investment thing didn't work so well was pretty much an understatement. I was just in the beginning of 1990. I was 29 years old. I was making $72,000 a year, which at that time was a substantial amount of money. Yeah. And I lost $60,000 in the stock market, buying stock on margin, which was presented to me in a wonderful way. When the stock goes up, you sell it. You don't even have to pay for the stock initially. Well, it's all great. But when the stock goes down, you're in trouble, which is exactly what happened. I pretty much wiped myself out, almost all my savings. And so it was really an aha moment in my life, which was, hey, I'm a young guy. My then wife was pregnant with our first child and said, if I go and get another job or just stay in this job, like, who the hell knows when I'm ever going to get out of this mess? Like, it seemed I owed this money. And so every day I was in this hole. If I stayed and continued to do what I was doing, I'd just keep shoveling deeper. Right. Mm-hmm. And so when I jokingly said earlier that, I could buy lotto tickets or go to Las Vegas, that was something I actually thought about, but it was completely irrational, and said the only way that I'm going to be able to ultimately get out of this mess is get into a situation where there wouldn't be any limit on my upside. And I didn't want to spend at that point in time, I don't want to spend the next 10, 15 years paying off this debt. I had other hopes and dreams and aspirations. And so
you got a year's worth of debt and you're like, oh, okay, I'll go buy a business.
No, I have a lot more than a year's worth of debt because I still have to pay bills. Right.
Well, yeah.
Right.
Fair enough. Yeah.
So I had a bit of savings and there was an and so some opportunity came up to get into my own business, which was actually an extension of the company where I was working at the time, which was taking on one of their products and setting up my own distribution and manufacture rep business, which cost me, quite a few dollars to get going, not an exorbitant amount. And to me, like, it's when you have very few options, it's very easy to make decisions, right? Like that's like that, so it's interesting because I get that similar reaction that you've had. And for me at the time, it was like a no-brainer. Like, it's like, this is the only thing I could do. Like, that's it. I mean, I really don't have a choice. And so the decision was pretty easy. I mean, someone said that it takes proverbial balls or whatever. I just didn't think of it that way. And failure wasn't an option. I had to make a go of this, right? I mean, I had, financially, just, I had bills and a kid on the way, and just, to me, it was pretty simple. And I also thought, I'm 29, so I've got this financial mess that I'm 100% responsible for putting myself and my then wife and child on the way into. I've got to get us out of this. Mm-hmm. And if I fail, which I really didn't give a lot of thought to, right? I didn't have a plan B. It was like burn the bridges behind me. So I said, but if this thing really craps out, okay, so I'll be 30 or 31, right? I'll just adjust.
That's awesome. That's awesome. Well, and it kind of sort of makes sense to me that if it's a business that you're already familiar with, and then you can take the skill set that you have and apply it into the business, then it makes sense. But to go from an employee to go, hey, I'm going to be an entrepreneur, I'm going to own my own company, and go, I'll buy out a plumbing company. How does that make sense in your brain? Because to me, it's a fantastic turning point, a fantastic decision. And the more I think people can understand how that happens, the more successful they'll be, especially in the whole mergers and acquisitions, and understanding that it is a very viable option for creating wealth, and two, that it's not necessarily a build on your current skill sets, but it can be.
You brought up the single most important piece of this entire process of acquiring a business, or the thought process. One point that you made that I'll correct, but in totality, you've honed right into the issue, which is the following. Experience in a particular sector, although I had experience in it, that's far less important than expertise. The skill set is everything. So someone who's working in healthcare or plumbing and heating, or manufacturing and aerospace parts, the expertise is not in the sector. The expertise is in your skill set. So the mantra that I've been repeating for decades to individuals looking to buy a business is the following, which is, whatever it is that you do best has to be the single most important driving factor of any of the revenue and profits of any business you consider purchasing. So to double click on that is identifying what it is that you're best at. And everybody has that one major skill set, even though some people say, well, I'm a generalist, I was working as a marketing manager, whatever. You have a one skill that's better than all the others that you have, whether that be sales, marketing, planning, logistics, putting a team together, executing a plan, estimating, organizing a project, whatever that is that you did within your job or your current job or previous jobs. If you apply that one single top skill set to a business that needs that to drive the revenue and profits, you're going to probably be very successful. And so people make this terrible mistake of confusing expertise with experience. The industry that you were in is your experience. Your expertise is what you did there and did well.
Nice. So how do you help people to identify what that is, especially if they're a generalist?
Very often it's a process of elimination. And so the materials that we have that teach people how to buy businesses and go from A to Z, or you're in Canada from A to Z, takes people through the whole process. And the right business very often is a process of elimination as follows. There's, an abundance of business for sale websites. People should be looking at that as a laboratory, not as an end. In other words, the businesses that are listed on the public for sale websites, and the statistics are terrible. Like 75% of those businesses don't sell, but it's the perfect place to conduct your lab research. Meaning, if you're not sure, well, the best way is pick out 4 sectors, whatever they may be, 4 sectors of businesses. Within those sectors, pick out 5 businesses that are for sale. Then you have a sample size of 20 businesses where you can go meet with the sellers, talk with the sellers, speak with the brokers. And through your conversations, your questions, and typically questions beget more questions, but your questions should propel you to do additional research related to that industry, to the employees, to the sector, to what the owner does every day. And as you drill down and get more research and become more knowledgeable, you're able to start to weed out certain types of businesses that simply don't make sense for you, whether they be distribution or manufacturing or retail, whatever it may be. After enough research and enough conversations with the sellers, you can draw the conclusion of, hey, can I see myself running this business? Because one of the most important things is you have to be brutally honest with yourself. If you're going for a job interview, this is not like getting a job. So if you're going for a job interview, right,
you're in the wrong place.
You're in the wrong place. And there's the fancy the fancy word for bullshitting is to embellish, right? So let's lose that word and say, if you embellish your skills a little bit to your prospective employer, it's not the end of the world. You're not lying, but you're talking up yourself a little bit because you want to get the job and you don't necessarily want to learn on the fly, but you're in an environment where you can learn on someone else's dime. When you acquire a business, you're learning on your dime, right? And so making sure that your skill set matches is critically important. So a generalist, someone who says, well, I've been doing a lot of different things, I'm not sure exactly what I'm really good at, by that process of elimination of going and speaking with 20 different business owners in certain sectors, it's like at the beginning, you look at this like a hopper, being very open-minded, or a shotgun approach, and then you want to bring it down to a pinpoint laser beam approach. And the only way to do that is go out and speak to business owners and learn about businesses to find out what drives those businesses and whether you can see yourself running it.
So is there a pattern that you've seen, whether it's somebody is an employee, they get a buyout, they decide to buy a business because it's easier just to take somebody else's over than it is to start your own, or entrepreneurs are going, I just really want to start my own, but I really need a division that does X. If there was one that was already established that would just fit into my current business, that'd be great. Or is there another prominent trend?
Well, I understand people's desire, potentially to have a startup. I had a number of them. I don't have the stomach for it anymore, and I don't financially don't need it anymore. But I mean, it's a great experience, right? Understanding that ultimately over the course of 5 years, 96% of them fail. So you have to be, ready for that. I'm just a huge believer in buying an existing business. The numbers are infinitely more successful because there's a known. With a startup, everything is blue sky. You can convince yourself of anything, right? It all sounds wonderful because you haven't made any mistakes yet, but you don't even have paper clips, right? Like you have nothing. You're starting from the beginning. And so with an existing business, while no business is perfect, right? And every business has its warts and blemishes. You start out with, you've got customers, you've got a product, you've got employees, you got systems, right? And you have something established. Generally, you're going to get the keys. The idea is you get the keys to an existing business on a Monday. You should be able to take a paycheck on Friday. Whereas a startup, you're investing a tremendous amount of blood, sweat, and tears over who knows how long. And so the buying an existing business allows you the platform, because what typically happens is individuals that are looking to pursue entrepreneurship generally are either looking to replace an income or generate an income. And when a startup, there's no guarantee unless you have huge backing. And, in a startup, what happens is, I don't know if you've done any, the sales come half as fast and the expenses are twice as quick, right? So it's just more
Sage
difficult.
advice I wish somebody had told me 20 years ago.
Yeah, of course, right. But it's still like, I'd never discourage someone from a startup if you have the guts, the stomach for it, and of course, the dollars to make sure you could withstand the headwinds, because it's going to take twice as long as you thought.
Right. So I have heard through the grapevine that some of the best businesses to acquire are the most boring ones because there's a repeatable process in there. Do you find that entrepreneurs feel like they bought themselves a job, or is there a different element that comes into play when they acquire a company?
So there's two questions here. The first one is, I like bland, boring, unsexy businesses that you could
Make
repeat, that
money.
you can get in, that you can make money, that you could learn, that they're not too difficult to explain. You don't want to get into something that's too complicated. If you can't explain the business quickly in, a sentence or two, it's probably too difficult for you to operate. So I like more simple businesses. I have 5 very specific golden rules for businesses that I look to acquire. I've purchased 13 companies myself and sold 12 of them. So I'm happy to touch on that in a second. But I want, one point that you brought up, which is really important, this idea of buying a job, right? Anybody who has no entrepreneurial desire, or is a naysayer, or wants to throw cold water on people's dreams, has that standard line of, you're only buying a job, right? And I say to them, so what's wrong with that? Like, think about it. Let's say this is buying a job, which it isn't, but let's say that's sort of wives' tale, if you will. Well, there was a study done not long ago that I read, and I think it was Gallup who did it. In America, 74% of the people who took the poll hate their job. So if you start with that, this concept of buying a job, well, when I say buying a job and acquiring a business, you acquire a business that's going to generate some joy in your life. You're going to enjoy going to work every day. You're going to be able to improve the lives of others. You're going to be challenged and have the opportunity to grow. You're going to be able to build value over time, improve your own lifestyle, the lifestyle of your family. And if you grow it well, or reasonably well, you're going to sell it in the future for more than you paid for it. So what the hell's wrong with that? If that's considered buying a job, I think it's fantastic. Like, wouldn't you?
You make it sound like buying a sports car, and it's like,
yeah, of course.
Awesome.
This is awesome. Well, wouldn't you be willing? Most people would be willing to invest some money to actually buy a job. Let's never mind, but buy a job that they loved. Like, right. You could spend your whole life, 40 years working. Like, if you had to buy a job, but were guaranteed to love it, why wouldn't you?
Right. Well, especially if you're going through your process of figuring out what somebody's aptitude is, because I think a lot of people have jobs where their aptitude isn't the focal point of their day, which makes it a miserable situation because they're constantly struggling to try and figure out how to do the thing. Whereas if you're doing the thing that you're naturally good at, then everything just becomes a challenge. It's like, oh, okay, we can rock through this. This is awesome. Bring on the next one. This would be great. So I think you bring up some great points, and a lot of the entrepreneurs, especially if they're what I call a startup entrepreneur. So I identify, just so you know my verbiage, I identify a startup entrepreneur, a growth entrepreneur, a scaling entrepreneur, and an exit entrepreneur. And to me, they have 4 different personalities, and they like the different areas of that business. Some people, may like to acquire in the growth phase, get it through to scaling, and then exit them. And that's totally cool too. But usually somebody's got kind of the something that makes one of them predominant. And I think, and this is where I want to get into discussion, because correct me because I'm probably wrong, is that people that like to acquire businesses, I think, aren't the startup people. They are the growth ones that want an engine that works. And it's like, how do we streamline this? How do we make it even faster? How do we make it better? How do we make it more repeatable so that it becomes a commodity that somebody else wants to buy?
Well, first of all, I'll tell you, the identification of those 4 categories is spot on. I look at it at 3 because I'm in the world of acquisition. So my version of your 4 is the following 3, which is, I call them the 3 G's, which is garbage, good, great. So to me, every new business, brand new business, a startup, or brand new business is garbage because you don't know what you're getting. You don't know if it's going to turn into something decent or it's just going to disappear. So to me, everything starts off as garbage because you have no idea what it is. And then you go through this trajectory, right? Because the life cycle of every single business is start, grow, reach a pinnacle, and then decline. That's every single business. Some take 3 years, some take 100, but there's no disputing that sort of trajectory. So I like businesses in the middle, which I call good, right? Because there's still substantial room to grow to great. So if you take those 3 G's on the hill, garbage, good, great, if you buy them in the middle when they're good businesses, and I like good, solid businesses that can grow with you as a new owner and take it to the point, up that hill towards great, and then exit. Or some people just keep them for their whole life and then pass them on or sell them or what have you. So in my world is similar to where, stop number 2 in your definition, which is people acquire the business. The first and most important thing is you want to make sure that the business is going to transition well to you as the new owner. And at the very least, you're talking about status quo, like stable is like, is sexy all of a sudden, right? Stable is like the new growth or value, right? Because you, especially with, some economic conditions. So you want to make sure that it's solid, stable, and can transition well to you as the new owner. And then through your skill set and learning, you're able to grow that business and potentially ultimately exit.
Nice. I love it. So talk to me about your businesses, because that to me, buying and selling 12, 13 businesses is crazy awesome. And crazy.
Yeah, well, it's sort of, it's not crazy when you're in it, right? When you look back at it or you don't know how to do it, it seems crazy. But so I've purchased 13 businesses plus 1 co-investment, a wide range of prices for businesses from, on the low end of $50,000 to over 200 million. They've been within the sectors or the types of businesses that I purchased that married my skill set well, did very well. Other ones did terrible. By and large, I buy businesses to operate, even if I'm operating them for a shorter period of time till I really learn the business and get the guts of the business in my belly, so that I could potentially hire the right personnel to operate them. Because you can't, people say, I want to buy an absentee business. Well, usually absentee businesses are absentee profits. So you first have to learn the business, then you can hire someone to manage it. So I've had related to retail, which my original business was in consumer products. I purchased 4 retail merchandising companies, which are companies that go into the stores across Canada. Will you be familiar, like Shoppers Drug Mart of the world or the Zellers of the world, which I hear is starting up again? And they make sure that the merchandise is on the floor in the right position, the right hooks and pegs, and advertising programs that have been shipped into the store are set up properly. So there's a number of retail merchandising companies. I bought a small entertainment company, a Far East in China manufacturer of infant products, an Asian trading company. I bought an ironworks company, which your probably next question is, what the heck did you know about ironworks? Well, the answer was I knew absolutely nothing, and that's why I went kapooey.
That's why I bought it. I was fascinated, so I bought the company.
Went pew! And then I purchased and I told you about the event company. I also purchased a legal document preparation company, which were in a large company in the US that was for individuals that were going to represent themselves in court. This was the preparation of all the documents. It was a very interesting business. We had flooded with calls every day. It was very, very challenging because every county in every state very often has its own set of documents. We automated that whole thing of all these documents. It was a phenomenal undertaking, but could never really grow it into anything substantial. We bought the company. It was doing okay, but it had a lot of demand. And we automated every part of it. And it was like one nostril above the water, could never turn it into anything magnificent. So I exited that business, then acquired a retail business, which was actually in one price shoe business, which was nice. We were profitable from day one, except after a little while felt like the business didn't travel. Retail is very difficult. Like you've got to be there all the time. And it was just like a stage in my life that I just didn't feel like working 7 days a week, even though we really made an unbelievable splash. It was a superstore, like an 11,000 square foot store, inventory of 60,000 shoes, all one price, lower market. So it was very interesting, but really couldn't turn it into anything terrific. And like the lesson that I've learned through all of it is, just reinforces what I've been teaching and preaching all these years through our published materials and courses, which is the marrying of your skill set, right? I mean, I always found it interesting, learning about a different type of industry or whatever, but when my skill set was not what was needed to grow that business, I paid the price. But overall, I've done great, and I've had a blast along the way.
I love it. So to somebody that's never considered acquiring a business, what do you see is their biggest obstacle? Usually what stops them from thinking that they can do it? And what kind of mistakes do they make? They think they're going to go in and get something, and then all of a sudden it's like, yeah, that's not what's going on here.
Okay, so when you look at statistics in our industry, it's pretty dismal. Like 90%, over 90% of the people who begin the search to buy a business never complete a transaction, which is really crazy. I mean, our clients are just almost the opposite. 82% have an 82% success rate. But the ones that fail pretty much suffer from the same thing, which I'm sure you would have anticipated. Buying a business, not like buying a house. It's not like you're going to just go get a real estate agent. It's going to bring you to a bunch of locations and help you out. It doesn't exist in that world. The single biggest mistake, there's three real big mistakes that buyers make. Number one is knowledge, expertise, and experience. They have no knowledge or understanding of this process, and they try to just jump in and race around the internet, clicking on businesses for sale, and they go nowhere in a hurry. Right? Or they come across situations where they have to value a business or look at the numbers or ask certain questions or negotiate, and they have absolutely no preparation. And so they run into too many obstacles or too many questions they can't answer. So they abort the project. So, knowledge going into the first thing you got to do is acquire the knowledge. That's number one. The second thing is getting very quickly to this idea of understanding what type of business is right for you. So instead of running around or running and looking at businesses, trying to figure out which, if any, are right for you, the idea is first figure out what type of business is right for you. Then it's much easier to find it and buy it. And then the third thing is this concept of the perfect business, because it doesn't exist. Every business has warts and blemishes, and have to understand you're not buying perfection, right? Every business is going to have some of its challenges. So you have to be able to separate incidents from catastrophes, which ones are problematic. And there's some issues in businesses that you shouldn't buy the business. If, for example, if it has enormous customer concentration and one customer leaves and you're out of business the next day, well, that's enough reason to not buy it. But smaller issues that may be in place that you could fix over time and address them properly, you have to just be prepared and willing to work with a business that's not perfect, because entrepreneurship takes an element of risk. If you take care of the first two, knowledge and preparation, and the right business, you can eliminate almost all of the risk. But understand that there's no such thing as a perfect business. So you have to be comfortable with what you're getting, and overlook nothing. Don't ever overlook anything dangerous or that could put you out of business, but it's just not going to be perfect. It's like, if you're looking for, to date someone, well, the guy may have a unibrow, so big deal.
There's always razors.
There's always razors, or
wax that puppy.
or you're not right, or you know what? Just get over it.
Right. That too. Awesome. So when it comes to the time that is required for somebody to take on a business, like, one is preparation. I get that. Like, how much of a runway do you want before you go, okay, I'm going to buy in January. So, if I only have 3 months till January, this year's probably not the best. It might not happen till next year, and that's okay, kind of thing. And then once I decide to buy, is it kind of a dedicated 40 hours a day, or not 40 hours a day, but you know what I mean, going into to really understand the business? How deep into the pool are you going?
Well, the process should take someone 6 months from beginning to end, which is and the largest part of that is finding the business, right? So that should typically take about 4 months. And then you've got a month in negotiating, valuations, etc., getting financing in place, and then a month to conduct your formalized due diligence. So from beginning to end, you do this right. Should take you 6 months, no longer. Sometimes it may, only because people may have restrictions. They may be working full time, and so only can devote 10 hours a week, whereas they should be devoting 20. But so it takes a year, but big deal, right? But that gives someone some parameters. As far as working is concerned, unless you're buying a real small business that you can devote a couple of hours to a week, which is, you probably get a couple hours worth of profit. To me, just from where I come at this, is you're looking to do this full time. You're looking to acquire business that's going to generate an income, replace what you already have, and you could devote yourself full time to it. I understand, yes, there are absentee businesses, and there are alleged, gurus on the internet that preach this absentee run business. I've been doing this 30 years. I'm not the smartest guy in the room, but I'm just old, right? I'm doing this long enough to know that, typically absentee businesses very often, as I said earlier, equal absentee profits. And so you have to be I come from the standpoint of jump into the deep end and run this business. If you want to get a manager in place, you have to know the business before you can hire a manager. You buy a business, if you don't understand it, if you don't understand it, how can you possibly hire someone who's going to understand it? You don't even know who to hire. So I'm from the school of do this full time, get into it. If someone wants to do this part time, well, just make sure you buy a much smaller business, because the risk increases exponentially if you're not there operating the business. So just make sure you don't make a big mistake, a big financial mistake.
Right. So like we were talking about earlier, it's finding your skill set that you're going into. So I'm assuming that doesn't necessarily mean that somebody's going to step in as CEO. A company may already have a CEO, and that's not necessarily the owner of it. So when you're acquiring it and owning it, is it possible to go in and take on a different position?
Absolutely. Absolutely. It is possible. Very often those scenarios play out when someone can't afford to acquire the whole business. And so they purchase less than 100%. They may leave management in place. I mean, my late partner and I had that model. We did mini private equity. We would buy companies, smaller businesses, purchase majority control, but leave the ownership in place. And that's the whole concept of private equity, right? They buy and they leave, because they're betting on the jockey, not the horse. So they leave the operator or the entrepreneur in place, and they're betting that he or she is going to be able to grow the business through their resources. As far as acquiring a business, oftentimes when someone can't afford it, they will acquire less. However, true entrepreneurship is you get in, you learn the business. Sure, the seller may be on board as a CEO to stay there for a period of time, but the goal is you want to learn the business. You're the new sheriff in town. Time to take over and operate the business, because you want to leave your mark. And then so I'm just a huge proponent of real entrepreneurship, because I know in my own life the impact that it's had, and so similarly, I fundamentally believe that most people can do this. I know that it's doable. Anybody could do it. I mean, a lot of people won't. It's just a matter of who does. But learning how to buy a business and then operate it, right, is something, it's so rewarding that especially people who've had even this thought of doing it. I mean, you owe it to yourself to at least learn how to do it and try to do it, and then decide whether you want to do it. Like, don't just sit on the sidelines while the world passes you by, and then at 65 years old, say, "Oh shit, I should have gone into my own business. I regret
Now that I'm
doing
retired,
that."
I think I'll go buy a business.
It's the perfect time to do it,
Right?
because you've got all these years of wisdom, right? And you could approach it like, look at it from a 30,000 point view, as opposed to getting your fingernails dirty necessarily in the guts of the business. You probably be in a better position now mentally and from a wisdom standpoint and operational savvy than you were 25 years ago.
I love it. So that does kind of bring up a point. Is there a bad time in life to do that? Or is it kind of a, hey, if you're ready, then, or just start looking at it? Because to me, it's kind of like, well, it's kind of like investments. Like there's no bad time to start understanding the stock market. It's, it's just education, understanding. And if you decide to jump in. If you decide not to, well, you're more educated on it now.
Well, I'm by nature very optimistic, but I'm also a realist. And when I look at a business, I look at it with skepticism because I want to make sure I don't overlook anything. I believe that the ideal time to buy businesses when there's blood in the streets or even a trickle of blood in the streets. Like I think right now, based upon where interest rates have gone up. There's people keep talking about this looming recession. We've coming out a period of a pandemic where some businesses went up, some businesses declined, other businesses went out of business. There's been great fluctuations. All those things bode well for a buyer because it really allows you to put performance-based deals into place. And so right now, in the context of today, I think it's a phenomenal time, like truly some of the best time in the last 30 years that I've been doing this. Leaving aside if we were having this conversation, everything was sort of, the waters were calm, it's always a good time. And you know what? It's always a bad time. And by that, I mean, you can always convince yourself not to do something. Like when is the right time to get married, to buy a house, to have kids, quit a job, get a new job, go into business, take a year off. Like when is a good time? You know when it's a good time to do that? Never. Right? Like, right. And yet at the same token, by the same token, it's always the greatest time to do it, right? So it's never and always. So you have to explore. So I just find a lot of that stuff is noise. And there's always, you're going to have people around you, family, friends, that are going to try to convince you otherwise. You have a certain percentage of them that do it because they just don't want to see you get hurt. You have a certain percentage of them that say it because they're jealous. And so to me, it's if you just can't sit on the sidelines. And so the right time to do it is always like yesterday.
Nice. So one thing I'm curious about, is there a difference between mergers and acquisitions? When it comes to mergers, are you looking for kind of different people? Obviously, you have to be running a business already, or and maybe not. Do you potentially look at two different businesses in the same industry and go, hey, I could take both of these on and merge them? What are the differences that you've noticed between mergers and acquisitions?
So it's a great question because the whole idea of categorizing this whole industry as M&A or mergers and acquisitions is really a misnomer. It's been around forever because mergers represent a very, very small portion of that. And they are typically, as you said, either someone who's already in business and is merging with another company. That doesn't happen often. It's really the acquisition business. The whole industry should be called buying and selling a business. That's really because that's what it is.
But
right?
Acquisition sounds so much better.
Yeah. And the other one is
it's like
BNS. It's like BNS, or people are going to say it's like bullshit, right? So it's like it's buying and selling businesses. That's what this is, right? For individuals, and if you do have a lot of listeners that are business owners, one of the things that people should pay a lot of attention to and give a lot of consideration to is growing your business through acquisitions. Right? It's a beautiful way. Whatever business you have, you can grow your business quickly and eliminate the learning curve by acquiring a business that's either a competitor or an ancillary business. So if you're in if you distribute, medical products, well, you can start to distribute other medical products or buy a manufacturing company or a delivery company. I mean, there's ancillary businesses that you could bolt on to make your business better. When I was in my early business and was selling infant products, well, I expanded to get into retail merchandising, and then into importing directly, and then to Asia. I was buying all these goods from Asia, and then said, well, why am I paying these Asian trading companies, 10% commission to do all this work? I might as well just buy an Asian trading company and do the work and pay myself, right? So built this thing about, these ancillary businesses. And so if you own a business, I remember reading years ago, this book, Thriving on Chaos by Tom Peters, which is an old classic. And they talked about the numbers that, people are more inclined, 60% greater chance of a client buying from a company that they already have a relationship with than going and getting a new customer. And so in many businesses, if you're operating, just figure out, how do you get more stuff to sell to the same people that are coming through the door? And so growing your business through acquisition is really, is a real viable option.
I love it. So do you have an example of a Cinderella story of one of your clients?
Oh, I have tons of them. I have a great Cinderella story from your own backyard. One of my favorite clients in Calgary, Alberta, Iggy Domagowski, who's now the CEO of Wajax. You're familiar with Wajax in Canada? It's the oldest company. It's older than Canada. He's actually now the CEO. He bought our course years ago, he bought our course a number of years ago. We just did a Zoom call with him. Him and his partners acquired 10 businesses for generating over $200 million, sold part of this to Wajax, and then became the CEO. I have clients. This individual's name is Don Wilson. He's now in the west coast of Florida. He was in Tulsa, Oklahoma. He's a longtime client of ours. He started with $30,000, bought a small candy store in a mall, bought another one and another one, then got into other businesses and exited, had a $6 million enterprise by the time he exited. It's a great story. And he brought his son into the business. His son also, Anthony, terrific entrepreneur, and now setting his own, setting upon his own journey. We've had tens of thousands of clients. We don't even have room for testimonials. For many years, I used to print them out, and I kept them in binders in my garage. I don't even have room for them anymore. And we're doing a redesign of one of our websites, and the company that was doing it said, "Send me all your testimonials." And then it was all of a sudden like, whoa, we can't have like 50 pages of testimonials. So we have spectacular stories, individuals who've acquired companies from a full range of them. I have one client who bought our course a number of years ago, then hired me to do some consulting work for him, which I really don't do much of anymore. And then we were looking at a number of businesses. He decided to start one and then would make these acquisitions. So we started one. Then went out and bought a bunch of businesses together. I was helping him in the engineering world. Ultimately, he grew that pretty quick, ended up selling it for over $20 million, then kept a piece of it, grew it again. He's since bought and sold hundreds of millions of dollars of engineering firms and been incredibly successly. Of course, you have his testimonial as well, a man by the name of Gary Elswig, a brilliant guy. But by and large, everybody started small, just bought these nice, smaller businesses. And I say small, sometimes there were businesses for a few $1 million, but we're not talking about $100 million companies. Some people buying, like Don Wilson invested $30,000, then arranged some SBA and seller financing, built it up. So, it's proof positive of getting into it can lead to all these wonderful outcomes, right?
Yeah, that was awesome. So I know our listeners are going to want more from you. How did they start that journey with you?
The easiest way is, go to my website, richardparker.com. Very easy to remember, richardparker.com. There's tons of free articles that we have there, some reports, and also the information or the courses that we sell that help people. It's called How to Buy a Good Business at a Great Price. We've sold 100,000 copies, over 100,000 copies of these. They can link and find that on there as well. But certainly from a standpoint of getting a ton of free information related to all the steps in the process, they could really, you could lose yourself on the website because there's hundreds of articles and they're helpful, and, you start to educate yourself.
I love it. I love it. So, of course, we will have all of Richard's links in the show notes. So go ahead and scroll down, click on the links, open them up in a new browser, of course, because we're not done yet. So, well, we delved into the story of when you decided to go into the entrepreneurial world, but I still want to know, at what point did you know that you were that special, kind of crazy enough to think that you could become an entrepreneur?
Since I'm a kid, I've always had business. I had my first business when I was 12, right? Okay. And which was a paper route. And then I started taking on all these other paper routes and selling them to local kids. When I say selling the routes, I'm giving them the right to deliver 100 papers. I said, you keep the tips. I was just making a penny a piece from the actual newspaper. And I had like 1,200 houses that I was delivering to every Sunday. Realized I did 100, but I farmed out, over 1,000 to other neighborhood kids, and the main paper paid me 1 penny a piece, and they kept their tips, which was at the beginning was a great tip. It was 10 cents because the paper sold for 15, so people used to give you a quarter. Then they raised the price to 20 cents, so people used to only still gave you a quarter. Your income dropped in half, right? Yeah. But I would say when I was really young, I always had, was always washing cars or growing up in Canada, shoveling snow. So it's always very entrepreneurial. More so from, my parents I come from a real lower middle class family. We didn't want for anything, but we weren't affluent by any means. My parents all worked very hard. And I think one of the, driving factors was my late father, who was a wonderful guy, huge influence on my life. He was always incredibly generous, making sure that I had a few dollars in my pocket, but he never gave me money if I didn't have a job. So he'd always ask me, need a few bucks if I was working. And I worked from the time I was like, again, shoveling snow at 10 or whatever. So if I was doing something, he always said, you need a couple of bucks. Fine. If I wasn't working, he never offered. So it was almost, he did, yeah, I mean, in his own way, it was brilliant, right? Like demonstrating like you got to work. And I pumped gas and, it grew up where there was no self-serve gas stations. You pumped gas and did oil changes and changed summer and winter tires. So my entrepreneur gene to me was always there, mostly from a standpoint is, I always felt good about having a couple of bucks in my pocket.
I love it.
Now I'm just happier having more, but it's like it's the same gene.
I love it. Like I said, you've been absolutely awesome. Any last words for our peeps?
Yeah, really, it's just something we touched upon earlier, which is you owe it to yourself to at least explore it. Doesn't mean, learn about a bunch of these opportunities and the potential to do them. Doesn't mean you have to do all of them or any of them, but you really owe it to yourself to find out what's involved and take some steps in the process. And then you could decide. I think a lot of your listeners would be shocked. It's easy to do once you know how to do it. And so learn about it and then make a decision. And then, you could decide whether or not you want to jump into this world of business ownership, because I think as people learn more and more about it, they're going to become fascinated and excited. And especially if you're intellectually curious, I think I think they're really going to start to, have this burning desire to be in their own business and say to hell with your boss forever.
I love it from so many angles, because I think so many people are afraid of what if I don't make money, and to study businesses that are already making money gives you a much better advantage point of understanding how to create a successful business if you decide to go on your own after that.
It's perfect. That's a perfect summary of it. You have your own laboratory, and then you could decide. Exactly.
Well, thank you so much for your time. I appreciate it, and I know how valuable it is.
Thank you. I appreciate your time, and your questions are great, and I really enjoyed our conversation.
Awesome. Peeps, thank you for being here with us today. Be sure to subscribe to the show, share it with your friends. We love helping entrepreneurs grow. Thank you for listening to 7 to 8. If you're interested in upping your speaking game, be sure to connect with our guests with the links in the show notes, and connect with me to see how we can help you get your tech done for you and help your speaking dreams come true.